Hello and welcome to Nutmeg's Investor Update for May. I'm Grant Warnock, Head of Customer Value at Nutmeg, and I'm joined by Shaun Port, our Chief Investment Officer. He's going to give us an update on what's happened in the markets over the past month. Hi Shaun.
Hello Grant.
Shaun, it's been an interesting month in the markets with lots going on in the US, Europe and Asia. Can you tell us a little bit more about this?
Yes, Grant, like the last 12 months, a lot of politics are really getting into markets rather than being about just the economics of what's going on in the world. So we've had the first round of voting in the French presidential elections. The Prime Minister here announced a general election, and also the tension between the US and North Korea about their missile program. So really, market movements have been a lot about politics rather than the fundamental factors like economics.
And with elections in France, and now of course the UK as well, how have markets reacted and what can we expect to see?
Well, the first round of voting for the French presidential elections has gone largely as markets expected, and everyone expects that Macron will win to become the next president of France. Here in the UK, the announcement of an early general election has really led analysts to believe that Theresa May will win a very large majority in Parliament, which will give her the wiggle room to compromise with the EU and lead to a softer Brexit, maybe a smoother Brexit than everyone had anticipated before. So the result of this has been quite a big move in the pound over the last month. So sterling has rallied by 1.6% against the euro and 3.5% against the dollar. These are relatively big moves. And when it comes to stock markets, the announcement in France has led to a quite strong rally in European equities. But here, because the pound strengthened, large companies, FTSE 100 companies, have actually fallen in value. So we've seen the FTSE fall by 1.3% during April. It's a bit of a mixed bag really when it comes to elections and how they affect markets.
Shaun, how have Nutmeg portfolios performed? We've had a number of new customers who might have experienced some ups and downs. What's your message for them?
In the context of the falling UK market, it's no surprise that Nutmeg portfolios lost money in April. Losses are up to 0.9% during the whole month. But if you'd invested in around the second week of the month, you would have seen greater losses. And that's because the FTSE, the UK market, was moving around quite a lot. So over almost a 1 week period, you saw the UK market lose up to almost 3.5%. Which actually sounds quite a lot, but it's relatively normal. You'd expect this to happen maybe 3-4 times a year to see the market fall by this magnitude. And not surprisingly, the UK market rebounded over those losses. So it's actually quite a normal thing for the market to do that and really nothing to be concerned about.
What changes have you made to portfolios?
Well, recently we've been reducing our exposure to UK equities, and because we are concerned about the rising value of the pound, I think the pound doesn't necessarily have to rebound to pre-Brexit levels, but we could see the sterling recover quite a bit, which would help hurt the performance of the FTSE 100 relative to other markets, that is. Also been moving more money into emerging markets, which we think look interesting at the moment, and also been very conservative in the way we manage our bond exposure. As markets start to move away from pricing in a hard Brexit towards a softer Brexit, that means that gilts, government bonds here in the UK, look increasingly expensive. So we've been very cautious in the way we manage our bond holdings, not just in the amount we invest in bonds, but in the type of bonds and the risk of those bonds themselves.
We've had a question from one of our customers, Stuart, on Facebook. With many of the banks not offering the recent lifetime ISA, while Nutmeg does, will the investment strategy change for this type of ISA, or will it remain the same as the others?
This is a really good question. So when we manage portfolios on an ongoing basis, what's really important for us is how much risk we should be taking for each client. And that's determined by their individual risk appetite, how much risk they're prepared to take, but also their time frame, how long they're investing for. So for us, we say that you should be investing for more than 3 years, a minimum of 3 years. And if you need the money sooner than that and you can't take any losses, then perhaps you should be looking at cash rather than investing in general.
Shaun, thanks very much.
Thank you, Grant.
And thank you for joining us. As always, if you have any questions for Shaun, please feel free to contact us via email or social, either through our Twitter handle or the comments section below. Thank you and see you next month.